Top pick number one, Ensign Energy Services.
Yes, the Ensign is having its sort of it's the most profitable it's been since 2014. And next year, well, and so if you look at the last time where the stock was in 2014, it was at $10. But I don't think we can assume it's going to get to $10 right away because it has a lot more debt today through an acquisition of Trinidad Drilling in 2018. Mm-hmm. But the operations are more profitable today than they were in 2018 when they brought on all this debt. So the stock, in my opinion, should at least be trading where it was in 2018, which is around $6.
Right, and you can see it's come right down.
Yeah.
Okay. Your next idea for us is Air Lease, AL in New York. What does that company do?
Okay, Air Lease is a company we've talked about in the past. I've had it recommended as a top pick. And it really hasn't gone anywhere in several years. And the reason why is that the company has been growing its revenues and earnings very nicely, but the PE multiple has been going down at the same time. So when I first mentioned this stock on this show years ago, it was probably around 15 times earnings. Mm-hmm. And now the PE ratio is around 7, 8. And so the earnings have grown. And Air Lease is basically, it's the largest aircraft leasing company of new aircraft in the world. All right. And it was profitable throughout the pandemic, and it raised its dividend each year. And what's unique about Air Lease is it's probably the one company today that is taking advantage of the chaos that we're seeing in the world.
In what way? In
terms of supply chain, for example. You see that Boeing and Airbus are having similar problems as NFI with the buses. Mm-hmm. They're having even more problems with getting their supply chain organized. And so they're suffering from a lot of delays in delivering their new aircraft. And so when there's a shortage or delays in new aircraft, the leasing rates on existing aircraft has upward pressure.
Okay.
So Air Lease, because they bought a lot of these planes in advance, they have a fleet, they are enjoying upward pressure on their lease rates. So that's one advantage. The second advantage they have is that during the pandemic, airlines were bailed out around the world, mostly from the help of governments to stay alive. Mm-hmm. And so they've taken on all this debt. And so they're not really in a position to go and buy new airplanes. And so if you can't buy, what do you do instead?
You lease.
Yeah, lease or you rent. And so that's also in favor of Air Lease. And then with rising interest rates, they can now go to some of their airline customers that have lower investment grade credit ratings and say that, sorry, but you're going to have to start paying a premium because your credit rating isn't as strong as it ought to be. And so they have upside from there. And then finally, they have...
Wait, there's more.
There's more. They have, for new aircraft deliveries, they have in their leasing agreements an escalator where they can charge a higher lease rate if the interest rates are higher. Oh. Now, they've already got like 93% of their debt is fixed, so they've already bought these planes with fixed debt. But when new aircraft come on board and the interest rates are higher, they have an escalator where they can charge a higher lease rate. So all these factors are sort of contributing to Air Lease being probably the most attractive it's been in many years.
And a yield Bloomberg showing of just over 2%.
That's right.
Bank of Nova Scotia, we touched on this earlier. It has been out of favor with investors.
Yes, and this is a simple recommendation. It's almost like the dogs of the Dow. Remember the dogs of the Dow? Yeah. Back in the day, I mean, if you bought the 5 Dow stocks with the highest dividend yields, you beat the market. Now, I don't know if that's worked in the last 10 years, but for a long time, that was sort of an easy way to get ahead. And so Bank of Nova Scotia is of the 5 big banks, the bank with the highest dividend yield, about 6%. And if you consider that the big 5 have never cut their dividends since World War II, that gives you fairly good assurance that the Bank of Nova Scotia dividend is pretty rock solid. And so you can buy Bank of Nova Scotia and get a 6% dividend yield at an 8 times earnings. And so the stock was hit $94 9 months ago. And if it takes 9 years to go back to where it was just 9 months ago at $94 from the current share price, that's about a 35 to 40% gain. Now, if they can just increase their dividend 4% a year, pretty modestly, the 6% dividend yield and the 4% compound growth over 9 years will be a 10% total annualized return, owning a bank stock.
Would you not be worried that there's a lot of repair to be done there in the sense that a lot of senior executives left?
Yes, I mean, well, that's why there's the opportunity.
Yeah.
And that they have the concerns about the repair work that needs to be done, the turnaround. But Canadian banks are hard to put down. I mean, they enjoy a strong oligopoly. There's the Bank Act that protects them. They're basically insulated from foreign competition. And so if you want to buy a company that's out of favor, that needs to turn around, a Canadian bank is a very opportune place to be.